The loan officer slid the folder back across the desk and said it plainly. That Massey Ferguson will put you under. He wasn't being cruel. He was being a banker. He had numbers in front of him: acreage, debt ratio, commodity price projections, equipment depreciation schedules, and the numbers told him that a 41-year-old farmer named Roy Greer, sitting across from him in a First National branch office in Decatur County, Indiana, in the spring of 1982, had no business spending $26,000 on a used tractor. Not in this economy, not with grain prices where they were, not with the interest rates that were running at 18% and showing no sign of falling. Roy listened to all of it. He sat in that chair the way men of his generation sat in chairs when someone with institutional authority told them what they couldn't do. Straight-backed, quiet, not arguing, not agreeing, just listening. And when the loan officer finished, Roy picked up the folder, thanked him for his time, and drove to a different bank. The second bank said the same thing. Roy drove home. He sat at the kitchen table that evening and looked at the numbers himself. He had looked at them before. He had been looking at them for 2 months, since the day he first saw the Massey Ferguson 2680 sitting on a lot in Greensburg, and understood immediately that it was priced wrong. That the dealer, a man trying to move inventory before winter, had listed it at $26,000 when the machine was worth closer to $34,000. Roy knew what the tractor was worth because he had been running equipment for 19 years, and because he had rebuilt 2 engines in his own shop, and because he understood, at a level that loan officers and commodity price charts could not measure, what a well-maintained 4-wheel drive machine of that size could do to a farming operation that was still pulling with 2-wheel drive tractors from the previous decade. The bank saw liability. Roy saw a decision. And the difference between those two things, that gap between institutional caution and a farmer's ground-level read on his own situation, is what the next 20 years were going to be decided by. Roy Greer signed the check with his own money, savings he had been building for 11 years. He paid cash, drove the Massey Ferguson home, and parked it in the machine shed next to equipment that was suddenly, visibly, a generation behind. The neighbors noticed within a week. Roy Greer had grown up on the same ground he was farming in 1982. His father, Earl, had bought the original quarter section in 1951 after coming home from Korea with a back that never fully healed and a determination that had never weakened. Earl ran a tight operation. He didn't borrow against the future. He didn't expand for its own sake. He bought equipment when the old equipment quit and not before, and he maintained what he had with the focused attention of a man who understood that a machine that doesn't run in April doesn't earn anything in November. Roy learned farming the way most men of his generation learned it, by doing it alongside someone who had already done it wrong enough times to know how to do it right. He took over the operation in 1974 when Earl's back finally made the decision for him. By 1982, Roy had expanded to 840 acres of corn and soybeans, owned 600 of them outright, and was leasing the remaining 240 from a retired schoolteacher who had inherited the land and wanted nothing to do with it except the rent check every March. The machinery was aging. A pair of 2-wheel drive tractors that had been adequate through the 1970s were beginning to show the cost of a decade of hard work. One of them had been rebuilt twice. The other burned oil at a rate Roy tracked carefully and found acceptable only because the alternative was a repair he wasn't ready to pay for yet. He had been watching the used equipment market for 2 years when the Massey Ferguson 2680 appeared. It had been owned by a larger operation in Ohio that had upgraded to a newer model and sold the 2680 through a dealer in Greensburg. The machine had 4,200 hours on it, high, but not worrying on a diesel that had been properly maintained, and Roy could see from the service records that it had been. The hydraulics were strong. The 4-wheel drive engaged cleanly. The engine ran without smoke at any throttle position. At $26,000, it was the best-priced serious tractor Roy had seen in 2 years of looking. At $34,000, it would still have been a reasonable machine. At $26,000, it was something else. It was the kind of gap between price and value that doesn't stay open long, and Roy knew it. The banks knew none of that. The banks knew that grain prices had fallen sharply since 1980, that farmland values were beginning to slide in ways that made agricultural lending increasingly dangerous, and that a farmer carrying existing debt who wanted to spend $26,000 on a used tractor with 4,000 hours was exactly the kind of risk that had been burning rural banks for the past 18 months. They weren't wrong about the risk. They just couldn't see what Roy could see from the seat of that machine in the Greensburg dealer lot on a Tuesday afternoon in March. Roy paid cash, and on the morning he drove the Massey Ferguson home, two of his neighbors, men he had farmed alongside for over a decade, were standing at a fence line near the county road when he passed. He could see them watching. He could see one of them shake his head. He drove on. The spring of 1982 was wet. It had been wet the previous spring, too, and the one before that, and Roy had watched both seasons cost him yield and cost his neighbors worse, because the difference between getting into a field on time and waiting another 4 days in April is not a small difference. It is not a number that averages out over a season. It compounds. Late planting is late, emergence is late, maturity is late, harvest is yield drag in a year that was already tight on margin. The Massey Ferguson 2680, with its four-wheel drive, changed the calculation. In the third week of April 1982, when the county roads were still carrying mud from the previous week's rain, and most of the fields in Decatur County were too wet to work with two-wheel drive equipment, Roy Greer was in the ground. The 2680's four-wheel drive kept traction where his old tractors would have spun and dug and made things worse. He worked through 3 days that his neighbors sat out. He finished planting by May 2nd. Most of the operations around him finished between May 9th and May 14th. That gap, 7 to 12 days of early planting, translated to a yield advantage that Roy calculated at 11 bushels per acre on corn by the time he combined in September. On 600 owned acres of corn, that was real money. Not retirement money, not expansion money, but the kind of money that changes the shape of a year from survival to stability. His neighbor to the east, a man named Gerald Pruitt, who farmed 1,200 acres with equipment that was newer than Roy's old two-wheel drive tractors, but still lacked four-wheel drive on his primary machine, finished planting on May 11th. Gerald's yield that fall was county average. Roy's was above it. Gerald noticed. He didn't say anything directly, but Roy saw him standing at the fence line in late September, watching Roy's combine work a field that was still showing good color, while Gerald's own crop had already been in the bin for a week. That fall, Gerald Pruitt applied for a loan to buy a new John Deere 4-wheel tractor. The bank approved it. The tractor cost $48,000 and came with a payment schedule that assumed commodity prices would remain stable. They did not remain stable. The farm crisis hit Decatur County the way it hit most of the Midwest, not suddenly, but with the specific slow pressure of a vice closing across several years. Land values that had been climbing through the 1970s began to fall in 1981 and kept falling. Commodity prices dropped. Input costs didn't drop with them. Interest rates that had seemed manageable at the peak of land values became crushing as collateral shrank. Farms that had expanded aggressively on borrowed money were the first to fail. Operations that had leveraged land appreciation to finance equipment upgrades found themselves upside down, owing more than the land was worth, carrying equipment payments that required commodity prices the market wasn't delivering. Roy Greer had not expanded aggressively. He had not leveraged land appreciation. He had paid cash for the Massey Ferguson, with savings accumulated over 11 years of careful operation, and he had no equipment debt. His land was owned free and clear, except for the 2-year note on the original 40 acres he'd added in 1979, which he paid off early in 1983 with the proceeds from a better-than-average corn crop. By 1985, 3 of Roy's neighboring operations had filed for bankruptcy or been forced into restructuring. Gerald Pruitt sold his John Deere 4WD tractor at a loss in 1984 to service debt on equipment he'd bought earlier. The tractor that had cost him $48,000 sold at auction for $29,000. Gerald kept farming, but on a reduced scale, leasing out ground he could no longer work profitably with his remaining equipment. Roy kept all 840 acres in production through the entire farm crisis. He did not miss a land payment. He did not sell equipment under duress. He did not restructure debt he wasn't carrying. The Massey Ferguson 2680 ran every season through it all. Roy changed the oil every 100 hours. He replaced filters on schedule. He rebuilt the hydraulic pump in 1986, a 2-day job he did himself in the shop. Parts cost $640, labor cost nothing. The transmission was original. The engine did not burn oil. At 8,000 hours in 1988, the machine showed wear in the places where is expected, and nowhere it isn't. At a co-op meeting in the fall of 1988, a younger farmer named Dennis Calvert asked Roy what his secret was. Roy said he didn't have one. Dennis said that wasn't an answer. Roy said, "I bought the right machine at the right price, and I didn't borrow money to do it." Dennis said the banks hadn't wanted to lend him money anyway. Roy said that was probably the best thing that ever happened to him. Dennis didn't understand that answer in 1988. He understood it better by 1991. The 1988 drought was the worst in the Midwest since the 1950s. Corn yields across Decatur County dropped by 30 to 50% depending on field position, soil type, and when a given operation had managed to get planted in the spring. Roy's planting date advantage, the result of running 4-wheel drive into wet April ground for 6 seasons, meant his fields were further along in their development when the dry weather hit in June. The difference was measurable. His yields fell, but they fell from a higher baseline than his neighbors who planted later. He lost money in 1988. He didn't lose the farm. Gerald Pruitt, still farming reduced acreage with aging equipment after the forced sale of his Ford tractor 4 years earlier, had a catastrophic season. He sold 160 acres in the spring of 1989 to cover operating costs. He kept farming the ground he had left and never recovered the scale he'd had in 1981. Roy walked into that spring of 1989 with equipment that was paid for, land that was owned, and the specific advantage of a man who had not used the good years to leverage the bad ones. The Massey Ferguson had 9,000 hours on it by then. In 1991, Roy's son David came back to the farm after 2 years working construction in Indianapolis. He was 24 years old. He had grown up on this ground, had driven equipment since he was 12, and had come back because he wanted to come back. Not because the farm needed rescuing, but because he understood what his father had built and wanted to be part of building it further. The first thing David asked when he walked into the machine shed was about the Massey Ferguson. He'd heard about it from his father for years. The banks that wouldn't lend, the neighbors who'd shaken their heads, the cash purchase that had seemed reckless to everyone except Roy. Now he stood in front of the machine itself, with 9,000 hours on the meter and paint that had faded along the hood, but hydraulics that still moved at full speed, and an engine that started on the first turn of the key in November cold. "How long are you going to run it?" David asked. "Until it quits," Roy said. David looked at the meter. "When's that going to be?" Roy said he didn't know. He said that a machine maintained correctly doesn't give you a schedule. It just keeps running until something decides not to anymore, and the job until then is to make sure the something that decides isn't neglect. David said, "The banks thought it would sink us." Roy said, "The banks didn't know what they were looking at." The decade that followed was not dramatic. Roy and David farmed. They planted in spring, harvested in fall, maintained equipment through the winters. Grain prices stayed low through most of the 1990s, but began to improve toward the end of the decade. They added 120 acres in 1994 when a neighboring farm went to auction and the land sold below what Roy knew it was worth. They paid cash. The Massey Ferguson accumulated hours the way machines do when they are used correctly and maintained seriously. 10,000 hours by 1993, 11,000 by 1996, 12,000 by 1999. In 1997, the injection pump failed. Roy had the machine towed to a shop in Greensburg, where a mechanic named Phil Hartley had been working on Massey Ferguson equipment since 1974. Phil pulled the pump, rebuilt it with new seals and a reconditioned rotor assembly, and had it back in the tractor in 4 days. Cost $980. Roy paid it and drove the machine home and put it back to work the following morning. In 1999, Roy replaced the front axle bearings. Scheduled wear, not failure. He caught it during a preseason inspection, ordered the parts, and did the work himself over a long weekend in March. Cost $420 in parts and 2 days of labor. The engine, the original Perkins diesel that had been in the machine when Roy bought it at 4,200 hours, had never been opened. It ran the same in 1999 as it had run in 1982. Oil consumption was within specification. Compression was within specification. The mechanic in Greensburg said he'd never seen a diesel of that age run that clean, and that Roy must have been doing something right. Roy said he'd been changing the oil every 100 hours. The mechanic said that explained it. David got married in 1995. His wife, Karen, came from a farming family in Rush County and understood the operation without needing it explained. By 1998, they had 2 children, and David was running the day-to-day operation while Roy stepped back into an advisory role that neither of them formally acknowledged, but both of them understood. In the spring of 2000, David bought a used John Deere 8400 at auction for $31,000. It was a good machine and a good price, and it complemented the Massey Ferguson in the way 2 different machines of different strengths can complement each other if the operation is large enough to need both. Roy watched his son bid on the 8400 at the auction and thought about the Greensburg dealer lot in 1982 and the loan officer's folder sliding back across the desk and the neighbors at the fence line when he drove the Massey Ferguson home. He didn't say any of that. He just watched David write the check and thought that the instinct for value, the ability to look at a machine and see what it was worth rather than what it cost, was something you couldn't teach directly. You could only demonstrate it across enough years that it became obvious. David had seen enough years. He knew what he was looking at. In 2003, Roy Greer turned 62 years old. The Massey Ferguson 2680 was 21 years old. It had 13,400 hours on it. The paint was mostly gone from the hood. The seat had been recovered twice. The steering wheel was worn smooth from 20 years of Roy's hands. But the engine, the original engine, still ran. At a grain elevator in the fall of that year, Roy ran into Gerald Pruitt, who had sold the last of his leased ground the previous spring and was effectively out of farming after 32 years. Gerald was 66. He looked tired in the way that men look tired when they have been carrying something heavy for a long time and have recently set it down. They talked for a while. Gerald asked about the farm. Roy told him David was running most of it now. Gerald nodded. He asked about the Massey Ferguson. Roy told him it was still going. Gerald was quiet for a moment. Then he said, "I should have paid cash for something older instead of borrowing for something new." Roy didn't say anything to that. There wasn't anything to say that the previous 20 years hadn't already said. Gerald Pruitt moved to his daughter's house in Columbus that winter. He did not farm again. In 2010, David Greer decided it was time to retire the Massey Ferguson. It had 15,800 hours on it. The transmission had finally developed a noise in third gear that Phil Hartley in Greensburg said could be addressed, but would cost more to fix than the machine was worth as a trade-in. The front axle had been repaired twice in the last 4 years. The hydraulics still worked, but were slower than they had been. David called his father and told him. Roy drove out to the farm the following Saturday and walked through the machine shed and stood in front of the Massey Ferguson for a long time without saying anything. Then he said, "What are you going to replace it with?" David said he'd been looking at a used Massey Ferguson 8480 with 6,000 hours. Good price, clean machine, sound hydraulics. Roy looked at him. David said, "I know what I'm looking at." Roy said, "I know you do." The Massey Ferguson 2680 was sold to a farmer in Ohio for $7,000. The man drove 4 hours to get it. He put it in his machine shed alongside 2 other Massey Fergusons of similar vintage and said he planned to keep them all running as long as he could find parts. Roy watched the truck pull out of the driveway with the 2680 on the trailer behind it. He watched it until it disappeared around the bend in the county road. 28 years. The banks had said it would sink the farm. The neighbors had shaken their heads. The loan officers had slid their folders back across their desks, and Roy had paid cash and driven it home and put it to work and never stopped. The farm was still there. The farm was stronger than it had been in 1982. The machine that was supposed to sink it had carried it instead. Roy Greer is in his early 80s now. He lives in the farmhouse he grew up in. David and Karen run the operation, 960 acres now, the result of 4 careful purchases over 30 years. Each one timed the way Roy timed the 2680, when price and value were far enough apart that the decision made itself. In the machine shed, the Massey Ferguson 8480 that David bought in 2010 has 11,000 hours on it. It runs clean. David changes the oil every 100 hours. He does his own maintenance where he can and calls Phil Hartley's son. Phil retired in 2014. His son took over the shop when he can't. On a shelf in the shed office, there's a photograph of the original Massey Ferguson 2680 taken sometime in the mid-1990s. It's parked in front of the machine shed, hood faded, cab window cracked in the lower corner from a branch that caught it during spring tillage. Roy is standing beside it. He is not smiling. He is just standing there, the way a man stands next to something that has done what it was supposed to do. David's oldest son, who is 19 and already working the ground, found the photograph last spring and asked who that was beside the tractor. David told him. The boy asked about the machine. David told him it was the one that kept the farm. The boy asked what that meant. David told him the story. The banks, the neighbors, the cash, the crisis, the drought, the years that didn't break them. The boy was quiet. Then he asked, did the bank ever admit they were wrong? David said banks don't work that way. The boy thought about that. Then he asked, was Grandpa ever tempted to go back and tell them? David said no. He just kept farming. That was enough. The photograph is still on the shelf. The farm is still standing. The instinct Roy carried into that Greensburg dealer lot in 1982. The ability to see value where institutions saw liability. To read a machine the way no spreadsheet can read it. To sign a check when every voice of authority said don't. That instinct is still running, from one generation to the next, without missing a season. The banks were wrong. Roy knew it before he walked out of that first office. He knew it every April when the four-wheel drive bit into wet ground that stopped everything else in the county. He never needed anyone to tell him. The fields told him every fall. That was enough.